Well, yeah, I mean, you had an unprecedented fall in property investment, industrial production, and fixed asset investments in China, and that was expected, but the scale was much greater than expected. And so the question is then, obviously, yes, how much we get back in March, and then what happens in Q2. Now, from China's perspective, we're now thinking that we're about 70 to 80% of capacity is now up and running. So you're still talking about steep falls continuing in Q1, but hopefully by the time we get to Q2, China itself will have production up to normal. But the trouble is now with Europe, the demand is going to start falling. So that's where the sort of impact is going to be felt over the longer term.
Miranda, there was a view that Europe would not take such extraordinary measures that we witnessed in China, that would be a very different state of play. Yet if you look at Italy and lockdown now, measures sweeping to Germany, France and Spain, does it surprise you that the Europeans have taken a leaf out of China's book in terms of controlling coronavirus?
Well, yes. I mean, you've seen obviously the ability to control, and the fact that the infection rates is coming down in Wuhan means that there is success. But the thing is, we're still not entirely sure because we're only now getting production back up and running again. So do reinfection rates start when everyone's back in the workforce and everyone's now sort of moving around the country again? So there is still the risk. We don't know what's going to happen sort of in Q2, whether we're going to get a spike up. So I think this is why, on the European side, you want the shutdowns, you want the sort of extension, but in terms of being a full-scale lockdown, as we saw in Wuhan, that's not necessarily what everyone should follow.
That's fascinating, because I think there is a big question mark as to whether there are reinfections in China or whether people have been released too early when the virus hasn't been completely beaten. Miranda, are we seeing any reasonable scientific evidence for either argument?
Well, not a scientist, but the issue, yes, you have. As movement starts in China again, then obviously they're worried that the reinfection rates may rise again. But also, obviously, a big focus in the domestic press has been on the imported infections. So people coming into places like Beijing, Guangdong, Guangzhou from outside China, and then building in reinfection. So China may have to then take sort of more significant measures to limit external infection rates as well. So it's becoming a much sort of longer term issue than previously thought.
Miranda, let's focus on the monetary actions for a moment here. Friday, big announcement from the PBOC, that's $79 billion, and other steps to try and keep the economy financially liquid. But we know over this 10-year expansion, there's been a lot of debt run up in financial and non-financial corporates. How do you think China's doing from a monetary perspective, and what are the risks going forward as a result of the largesse we've seen over the last decade?
Well, it's interesting how they're tackling this because, I mean, although there's still room for them to cut interest rates, what we're expecting is much more focus on the fiscal expansion, so a higher fiscal deficit, and then sort of more targeted measures and things like support for the auto industry and also some of the sort of manufacturers in terms of trying to sort of ease their cash flow by not, taxes and fees. So not a blanket sort of cut in interest rates, which will obviously then influence asset prices. But in order to have a fiscal expansion, you've got to get money into the country. And that's potentially going to be where China has a problem because the balance of payments is going to start looking a lot messier now because once exports fall, you've already had a trade deficit for January and February, and if investment also falls as a result of that, then China's going to struggle with its own monetary, to keep its own money supply steady in order to actually then do its own fiscal stimulus.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.